You're live.
Okay, so hey everybody, and good morning. So hey everybody, good morning and good afternoon and good evening, depending on the time zone. This is Daniel, and this is Hyperledger meetup, and we're gonna speak of deposit tokens or tokenized commercial bank deposits. That's gonna be the topic for today. And basically, just for not to be surprised, my network is sometimes a little bit buggy, so it might happen that I go offline live for 10 seconds. That's gonna be like my unintended coffee break, and then even if my voice is like a little bit buggy, then I just try to speak slowly. So I hope it's gonna be great at the end. So well, I mean, this is Hyperledger. This is the blockchain meetup series from Linux Foundation, and then so basically Hyperledger focus for the first round basically on commercial applications and basically like more like consortium ledger.
Daniel, you still there? Oh, looks like Daniel dropped.
That was basically my 10 seconds unintended coffee break. But anyway, so basically the topic for today is deposit tokens or tokenized commercial bank deposits, which is practically very early stage. I would say that there isn't many applications on the topic. So basically, what I'm gonna have, I will have like a 30 minutes presentation on the topic, and then we can have some conclusions, some discussions, some questions and answers at the end, basically. So this is the agenda for today. We start with one slide. What is actually a deposit token? I will just continue a little bit with like taxonomy of money or novel digital money forms. Then I will have a couple of slides on use cases and benefits of deposit tokens, some initiatives. Again, there isn't very much initiatives. It's just because, I mean, this whole field is very novel and very new. Some platforms, I mean, actually there's only one platform which is surely capable of issuing deposit tokens. All the others are just, I mean, I would say basically so all the other things are just platforms that might be capable of issuing basically something which is a deposit token. I will give some very good further references basically at the end, and then some conclusions, and of course we can continue with questions and answers. So that's gonna be the agenda for today. I hope my microphone and everything works well at the moment. Again, I might as well have some issues, but I hope it's working at the moment. So let me just continue, and then so what is basically a deposit token? So deposit token is basically a transferable token issued on a DLT. It shouldn't be necessarily a distributed ledger, but usually we associate with a DLT or a blockchain. And it is basically, this token is issued by a licensed depository institution, practically by banks or commercial banks, which basically has a deposit as an evidence behind this issued token. So this sounds a little bit like scientific for the first run if you're not a banker. Basically, the idea is that for a classical bank deposit, we issue a token. It's important that this should be a tokenized form of bank deposit. And then, so I just say it is issued on a blockchain on a distributed ledger technology, or with distributed ledger technology. It's not necessary, not absolutely necessary that it is issued on a DLT, on a blockchain. It is just, if we say tokens, we usually associate tokens with blockchain, with distributed ledger. I mean, we might as well interpret tokens without blockchains. There are some initiatives, like I think one from Visa, that tries to do like tokenized applications on message-based platforms without blockchain. But usually, if we say token or tokens, that's something which is practically associated by blockchains. So usually there are two concepts, and then they are pretty much the same. There are like very minor differences between deposit tokens or tokenized commercial bank deposits. So I just use them actually as the same concept. So if we say like deposit tokens or tokenized commercial bank deposits, what we think of, that's basically a claim against an issuing bank. That's usually a commercial bank. It is convertible on demand and at par, so one-to-one to traditional bank deposits, or even to central bank money, which is I mean cash mostly. It should be like full fungible to provide the singleness of currency. It is certainly a very good question how we can provide like full fungibility. It's usually a tricky question. I mean, even with like CBDCs, it's a difficult question how we can provide full fungibility. But the idea is basically that deposit tokens act as money, as a single money, basically, which is equal to all other forms of money. Again, if that is realistic or not, that's a very good question. What's important, it's backed and handled the same way as classical commercial bank deposits. So basically it means such deposit tokens should be regulated actually the same way, or more or less the same way as commercial bank deposits. Of course, I mean, it raises some challenges because of the nature of blockchain, which is more like, you know, I mean, not in the company, but somehow brings information and token and value outside the banks, outside of companies. So it is very much questionable if that can be realized absolutely. But the idea is that from a regulation, from a practical perspective, it is the same as a classical commercial bank deposit. From a regulatory principles, it's like AML, KYC, Basel, and stuff like that should work the same way. There are some discussion as well that, like, for instance, deposit insurance, which is like 100,000 euro in the EU, if I'm not mistaken. It's, I guess, like 250K in the US. So like deposit insurance should be available or valid for deposit tokens as well. Again, I mean, that's the idea. Certainly, it's a good question how it can be realized as basically tokens are not in the banks, not in the company, but somehow a little bit more outside. So that's deposit token or tokenized commercial bank deposit. So let's see some taxonomy of money and some different forms of money, and let me just try to put in somehow into the taxonomy of money. For instance, this deposit token. This is the classical money flower. It's like, I think, like 3 years old, so it's pretty old actually, and it won't capture fully like this tokenized deposit. It's such a novel or such a new idea. But basically what we see here, that's like 4 dimensions. So we got money which is central bank issued, we got money which is peer-to-peer, or I would say more decentralized, we got money which is electronic, and we have money which is universally accessible. I would say it's for retail. And then we can have like different characteristics or different kind of monies here. So for instance, if we say cash is issued by the central bank, it is not electronic, it is practically peer-to-peer in a sense, and it is retail, so it is universally accessible. It's like novel ideas of central bank digital currencies. These are in the middle practically. It's like kind of central bank issued peer-to-peer money, which is electronic and retail, so accessible for everybody practically. So this is the money flower. I just don't take a look on all of these items. But if we take a look on like deposit tokens, we are somewhere in the direction of bank deposits and special form of cryptocurrencies, I would say. So first of all, basically deposit token is a kind of bank deposit because it's electronic and it's universally accessible, meaning that's practically a retail payment. But the point is that basically that's not issued. I mean, it is issued centrally, but it has some decentralized characteristics as well. So in some sense, it has characteristics of the stable coins. We see here cryptocurrency again, because that's, I mean, this money flower is old, like 3 years old. So it's a bank deposit, which is electronic, which is retail, but has some peer-to-peer characteristics as well. We see here like just peer-to-peer. If we say like the decentralized can be interpreted in many different ways. So if you think of deposit tokens, I would say it's something which is semi-decentralized. It is because it is handled by a distributed ledger platform. So like the transfer itself is decentralized, is peer-to-peer, but the issuance of the money, the issuance of the token is not decentralized. The issuance of the money is practically realized by the given commercial or by a given commercial bank. So if you speak of like deposit tokens, we are somewhere here with some peer-to-peer decentralized characteristics. It's electronic, it's not issued by the central bank, it's retail, and it has some decentralized elements as well. So that's what I summarized here. It's electronic, it's retail, it's non-central bank issued, it's not issued in a decentralized way, but it is handled in a decentralized way in terms of transfer. It's issued by banks, it is tokenized, partly peer-to-peer. The token settlement is peer-to-peer, but the issuance is not. The issuance is centralized. So that's what the deposit token. We can compare a little bit with like other novel digital money forms as well. And then it's getting, I mean, this is like a more up-to-date list of different monies, different competing monies than the money flower. So first, we got something which is a CBDC. CBDC is a money which is issued by the central bank. It is basically a direct liability to the central bank. And then we can have like wholesale or retail versions of it. It's like the digital euro initiative on the European market is one such retail CBDC initiative at the moment. Of course, we can speak of something which is a synthetic or indirect CBDC. So the point is here that a synthetic CBDC is not issued by the central bank directly, but indirectly by regulated institutions. These regulated institutions might not be banks. I mean, they can be practically like payment service providers. And then basically a synthetic CBDC is a representation of a private liability that is backed by one by central bank money, I would say. So that's practically, it's like by traditional reserves held at the central bank. And we got tokenized deposit. So tokenized deposit is issued by regulated deposit taking institutions. So practically mostly by commercial banks. And this is a direct representation of a private liability against a commercial bank, and it is backed by commercial bank money practically. It is backed by the balance sheet of the commercial bank. And basically what's insured, and it is, I mean, theoretically should be regulated the same way as basically a commercial bank deposit. We got some other two new forms of money, and then here things are getting a little bit like more complicated. What is a deposit token and what's not a deposit token? So for instance, we can have something which is a fiat-backed stablecoin. Fiat-backed stablecoin can be actually issued by regulated and non-regulated institutions. And then it can be different if it is fully backed by fiat, or it is just partly backed by fiat, or partly algorithmic or something. So fiat-backed stablecoin can be actually more complicated. It is basically a liability against a private issuer, which is backed fully or partly, fully or partly by fiat currency, and then basically that's either regulated or non-regulated. There are some regulated still. And then we can have something which is tokenized e-money. And then tokenized e-money is like another similar concept. There are regulated e-money issuers who can practically issue such, I would say, a fiat-denominated stablecoin, which is a liability of a regulated EMI, and it is referenced to a single fiat currency and backed one by one, basically in liquid or low risk assets. So I would say, so these three categories can be basically similar if they are issued by banks. Theoretically tokenized, and the difference is sometimes difficult to decide. I would say it's like if it's a fiat-backed stablecoin which is issued by the bank, then practically it should be regulated by MiCA as an asset reference token, and that practically provides like other guarantees that are available for commercial bank deposits, for instance. So they can be similar, but especially if they are issued by banks. But there might be some minor differences. These are most likely probably like legal differences, and then differences in like securities and then different rules that should be kept practically. So let me just continue and with like little bit like, you know, I mean, easier topics. Let me see some use cases and benefits of deposit tokens. So firstly, they can be used in payment. They can be used in faster or cheaper, or as a faster or cheaper payment solution. It can be especially exciting if it is like a cross-border payment, because, like, you know, I mean, payment in one jurisdiction works pretty well at the moment, or payment in the EU pretty well. But if we speak of like cross-border payment, that's usually something which is regarded as slow and inefficient and expensive. So it can be, deposit token might be actually a solution that improves cross-border payment. Then we can speak of like innovative payment. These innovative payment solutions that are especially associated with DLT. And then, so one or such examples are micropayments, and more on the technical side. So I mean, something, if you have like a blockchain, then we can have like a state channel integration. So we can have like, you know, I mean, 1,001 cent transaction per second or something similar. It can provide something which is a machine-to-machine payment, perhaps generally better pay-per-use license models, and perhaps even better innovations like wallet integrations and so on and so on. For instance, one thing which is on the European market, there's the European wallet initiative at the moment, which actually tries to integrate like payment solutions as well. So it's like especially a hot topic, like how like practically a verifiable credential based wallets can be integrated with payment solutions. And then one way of thinking of it is like using deposit tokens. So another benefit or use case is programmable payment, of course, or programmable money. Especially if we think of like multi-asset atomic transactions. I mean, of course, blockchains and smart contracts are very good of realizing such things. It's like changing one currency to another one, or one token to another one, or basically, if we think of there's like an initiative in tokenizing everything. So if we think of like other tokens, non-money like tokens as well, then especially like payment for non-money like token is difficult at the moment. I mean we can use, of course, like stablecoins, but it's just not fully regulated, but partly, so it might not be the best option. So as soon as we speak of like multi-asset atomic transactions, of course, I mean blockchain and tokenization is a good way to do it. It implies reduced counterparty risk, of course, supposing that the smart contract is secure enough, of course. So two examples are like payment versus payment. It's like if I change one money to another one, or one currency to another one, or payment versus delivery. It's again the use case. Let me just imagine if I have like tokenized security, like a tokenized stock or a tokenized bond, perhaps in the future, and I just want to buy for a tokenized money a piece of like a tokenized bond. Of course, it's possible to do with centralized institutes, but that's kind of a counterparty risk. So it can be probably done faster, cheaper, and with reduced counterparty risk if we think of full tokenization. And the money leg, I mean the cash leg, can be basically a deposit token. So further use cases and benefits. I mean, one big benefit is interoperability generally. The way I see, and the way several people see, there's a big gap between the classical financial world or infrastructure and with this new like blockchain based financial attempts. I mean, these are just the experimentation, of course, at the moment, but despite it's just pretty difficult to integrate them into the classical financial world. So deposit token might provide actually a way for interoperability with like integrating money in a very classical banking form with other DLT based financial ecosystems. It might provide a way, integration way with like Web3 applications. I mean, of course, Web3 was pretty much hyped like for 2 years. So the hype is at the moment over, but I would say, I mean, despite the hype is over, Web3 is here to stay. And then again, anything which is in Web3 and has a payment lag, that's kind of difficult. I mean, people use cryptocurrencies, of course, but it's just risky, non-regulated, and so not the luckiest thing to use. So one way of bringing like a fully compliant regulated payment into the Web3 world might be actually a deposit token as well. Again, it can be like a cash leg for any digital asset transactions. It can provide better integration with tokenized use cases, of course, and perhaps this is already a little bit more like science fiction, or perhaps not so science fiction, but a little bit like it might provide actually an integration way with this DeFi, decentralized finance. So decentralized finance is very much innovative and then very much experimental and very much unstable at this stage. But for instance, one way of bringing like more stability and more regulation into the field of DeFi could be like using regulated tokens as payment. And then this can be actually deposit token. It's a little bit like long-term stuff, I would say, but it's certainly a possibility. One big benefit, basically, the deposit token preserves actually the credit creation, and it preserves basically the two-tier monetary system. So if we think of like some of the initiatives like CBDC, then even CBDC or stablecoins might have actually the risk that they just disintermediate the banking system. Even if you think of like the new digital euro initiative, the new digital euro initiative has like a free 3,000 euro limit as an account limit, not to compete with banking money practically. But this limit is very much a struggle. So it's just difficult to bring like new payment solutions, I would say, in a way that it doesn't compete practically with the banking system. So this could be a way because this way practically it is a token, it is a new innovation which is issued, which is introduced directly by the banking system. Last but not least, there might be even like possible coexistence with CBDCs. Especially with wholesale CBDCs. If we think of, deposit token is clearly like a retail use case. So like a retail use case, deposit token and retail CBDC might compete with each other. But if we think of like a wholesale CBDC and deposit token combination, that might actually work. So let me have some technical stuffs. I have just this slide on technicals. It's very early stage. We can define several token types. We can brainstorm how such deposit token can be issued. We can consider several token types and infrastructure considerations. So in terms of tokens, probably the worst solution is like something which is called a colored token. In such situation, each commercial bank issues its own deposit token totally independently from other banks, perhaps on a different technological basis, on different reserves, and then even tokens and risk and technology is specified independently from the others. It is not a very lucky solution because it has problems with the singleness of money. It has problems with fungibility of the token. So it would be a better way if it would work the same way as like a retail money. Even if retail money is issued practically partly by banks, it is fungible. It is considered as a single currency, basically. The next solution is that several banks practically jointly own and participating, issuing like a single deposit tokens. This participation can be like same platform, same token, same liquidity standards, providing better fungibility and liquidity. And then the best way is something which is a standardized token. Here, practically common token standards can be introduced that are backed by highly liquid reserves, and then it might provide like full fungibility of the deposit token. In terms of infrastructure, One consideration is like issuing on a private ledger, which is specific to bank. Again, this is probably not the luckiest solution. Another solution might be is like issue on a consortium ledger. Here the idea is that like several institutions join and then set up a consortium ledger. It might be a possibility, certainly. And then last but not least, public ledgers might be considered, especially with deposit tokens. I mean, public ledgers are getting a little bit like more complicated at the moment, because there might be the consideration on layer one public blockchains, and there's getting to be many like layer two extensions as well. So I mean, public ledgers from an infrastructure point of view getting like more and more complicated, I would say. So I did not find many initiatives. It's again, I would say, because this field is very early stage. Of course, I mean, this whole field was initiated probably by JP Morgan. They already created like a platform, that's Onyx platform. As far as I know, that's a consortium distributed ledger platform with like the building functionalities for issuing, for instance, deposit tokens, and then making some operations on that. And they even have like a kind of a pilot projects, I think, in Singapore or with the monetary. So sorry, that's again, that's my coffee break practically. So I share again my screen. So I would say, give me just like 5 more minutes. I finish my presentation, and then we can have like a discussion, and then we can discuss like anything. I got like 4 more slides, but these are mostly like, I mean, conclusions and stuff like that. So just give me 5 more minutes, and we can jump into the conclusion, and then we can have any discussion that you feel like. So one thing is that like the Bank of England provided the guidance on tokenized bank deposits. So practically the Bank of England pushes basically deposit tokens. And as far as I know, there's one pilot from MasterCard for deposit tokens. So these are the initiatives. Of course, question is which are the possible platforms that might provide functionalities for deposit tokens. And I would say, as far as I know, only the Onyx platform from JP Morgan, which is fully meant to provide deposit token functionalities. But I would say there will be probably other platforms as well that might provide such functionality on the short term. But again, these are just my guesses. I would guess the platforms that provide at the moment like CBDC sandbox, CBDC experimental solutions. It's because from a tokenization perspective, like a tokenized central bank money and the tokenized commercial bank money is not something which are very much different. Again, from a technological perspective. So platforms or sandbox providing CBDC like pilots or initial frameworks can be probably easily extended to deposit tokens as well. So again, but these are just guesses. I would guess the regulated liability network, perhaps it might have some it might have some deposit token functionalities already. I would say the XRP ledger, Ripple, they have like a CBDC sandbox that can be probably very easily extended to deposit tokens. R3 Corda has like basically kind of a CBDC sandbox as well. It can be probably very easily extended to deposit tokens. And then under Hyperledger, there are like Hyperledger CBDC experiments. These are more like on a research phase, because I mean this whole field is very much open source. But there's one experiment with the Hyperledger Fabric and the token SDK. Again, technically that could be very easily extended to deposit tokens as well. And of course, the question is, I mean, of course, these are originally CBDC initiatives, but if you speak of like deposit tokens, we might as well consider like public blockchain networks, and then more, it's just more viable than for a CBDC. And of course, it's the question if anybody provides like a deposit token framework on public blockchain networks. Not that I know at the moment, but perhaps it's coming in the future. And just let me summarize 2 more slides, and then we can likely jump into discussion. So I have some further references. These are basically the white papers. It's like the banking on tokens from Digital US Association. It's worth reading, actually. I contributed basically here. Then there's the deposit token from Swiss Bankers Association. It's a very good white paper as well. Of course, the deposit tokens from JP Morgan. That's practically, I mean, that's the Onyx platform. There's like a white paper from the Deutsche Kreditenwirtschaft as well. And then, as far as I know, there are like 1 or 2 white papers from BIS as well. These are good white papers, so I would recommend to read these white papers. Again, these are just 4 ones and like 2 more BIS papers, and then these cover pretty much the state of the art of deposit tokens. So 1 more slide as a conclusion. So basically, as a conclusion, I would say the innovation of money, has been really heavily accelerated in the last couple of years. So like for like 20 years, there were like, I don't know, 1 or 2 different kind of money. At the moment, I would just count like, I don't know, 6, 7, 8, 9, 10 different kind of money. So it's just sometimes tricky a little bit. On the other hand, like token-based innovations are expected to have very high innovation potential. So like again, there's this tokenized Europe 2025, which is like an EU initiative. So it's a little bit questionable if it's more like marketing or if it's really meant seriously. But anyway, it's a good initiative. So supposing that most of the services will be tokenized in Europe, like I would say the end of the decade, for instance. Of course, the question is, which is the payment that can be best integrated with like such tokenized services? Again, payment in generally with token-based applications is challenging. And then most like payment or current token-based payment solutions like cryptocurrencies or even stablecoins, they have simple weak legal guarantees and very weak or even weaker customer protection. So deposit tokens might provide here basically a compliant and regulated tokenized solution for payment. And again, one important aspect, it does actually without disintermediating the banking system. So that was my conclusion, and then I have just finished my presentation, so we can likely discuss any topics that you feel like. So if you have like any questions, just feel free to unmute yourself and ask, or if you have comments, just feel free to unmute yourself and comment my presentation or comment comment basically the topic. Otherwise, I'm just reading through basically the chat, and if I think I can answer the recent question, I will just try to answer. So there's a question if there's any difference between deposit tokens and tokenized deposits. I would say I don't think there's much difference. Perhaps there's like minor difference from a legal perspective, but otherwise from a technology or even from an economic point of view, I would consider them to be the same. But again, if you see differences between deposit tokens and tokenized commercial bank deposits, just let me know. I won't discuss with that necessary. I would consider them to be the same. Yeah. So for the questions, this is live stream on YouTube. It is recorded, so you can take a look on the recording later on. And then the slides will be shared as well. So there's one comment regarding decentralization. So in terms of decentralization, decentralization is not just a black or white thing, not just the binary thing, which is 0 or 1. There are many levels of decentralization. So we can consider decentralization if that's practically like a consortium ledger or a fully public ledger. Even on a fully public ledger, there are like different arts of decentralization. It can be like more decentralized as Bitcoin, or less decentralized as having with like a partly centralized consensus algorithm. And then we can think of decentralization as functionality, for instance. So again, if we speak of like deposit tokens, clearly the transfer, the ownership of this token, which is decentralized, but like the issuing of this token is not decentralized. It's like fully centralized. So again, we probably speak of here generally not of fully decentralization, but kind of a partial decentralization. Yeah, so there's one question: what's the difference between deposit token and stablecoin? And then so stablecoin actually might work pretty differently. For stablecoins, there are different schemes actually. You can have like fiat-backed stablecoin. You can have like crypto-backed stablecoin, and you can have like algorithmic stablecoins as well. And then even if you have like fiat-backed stablecoins, it is not necessarily sure that it is fully backed by fiat, and if it is issued by a bank, so it is not sure that you have like the same guarantees, legal and security guarantees for your tokenized money as for your bank deposit. But if you just, I would say, if you just say that, hey, what is the difference between a stable coins, which is fully backed by a commercial bank deposit and issued by the bank, and deposit tokens, I would say not much. Probably some minor regulational issues. Probably in that specific use case, your stablecoin is regulated by the MiCA asset reference token, and your deposit token is by banking regulation. So there's one again. I mean, if you have like any questions, comments that you want to issue or discuss with the community, just go ahead, unmute yourself, and then just comment or ask. Otherwise, I'm just reading the chat, and I'm just trying to interpret questions and try to answer them. So there's a good question. It's an open question how like a deposit token should behave as an investment vehicle, but probably it can. So, like for instance, what's the interest-bearing characteristic of a deposit token? That's still like an open question, but generally that should work the same way as deposit, basically. So theoretically, that should have like kind of interest-bearing, I mean, interest characteristic as well. Yeah, there's one question if I can share my thoughts on the regulational framework for stablecoins by the Monetary Authority of Singapore. Legal stuff. I have some insights on the MiCA regulation, on the market on crypto assets regulation, which is issued by the European Union. But otherwise, it's just monetary regulation from the Monetary Authority of Singapore is just too far from my competence. I'm not quite sure if there's already like SEC from the Security Exchange any regulation or regulation attempts. I didn't find like examples apart from JP Morgan if there's much initiative for deposit tokens in the US. Basically, I'm more on the European market. Yeah. So deposit token is not equivalent to a retail CBDC. It has some differences, for instance. So, for instance, one difference is that retail I mean, certainly the question is which is the infrastructure. If you say retail CBDC, then basically retail CBDC is not necessarily considered to be issued on a blockchain. If you see like the digital euro initiative, it will be issued on instant payment systems, not on a blockchain for several reasons. So that's one big difference. And then basically deposit token is a tokenized form of money. So it's most likely will be issued on kind of a blockchain. That's one difference from a technical point of view. From an economical point of view, a deposit token is more risky. It's just because it is based on banking money, and banking money is simply more risky than central bank money. That's another difference. The third difference, if you use like deposit token, I mean, if you use retail CBDC overall, you might practically I mean, compete with the two-tier banking system, which might affect financial stability very wrongly. So that's a pretty big issue. If you use a deposit token, then you don't have problems with this with the existing system, basically. So what is the difference between retail CBDC and wholesale CBDC? So retail CBDC is for everyday users. It's like if you buy a coffee like in a Starbucks, that's retail CBDC. If you do like settlements between two banks or like two foreign banks, for instance, that's wholesale CBDC. Wholesale CBDC is rather between banks. or financial institutes, not for everyday users. So again, if you have any questions, I mean, just feel free to unmute, or comments, feel free to unmute yourself and then just ask the question. Otherwise, I'm just reading the comments and questions, and then I just try to pick that I can answer, basically. So technical perspective is the deposit token produced and held by a smart contract on the blockchain. So I mean, it's a technological question. It depends on the underlying blockchain infrastructure. There are blockchains where practically you need smart contracts for tokens. So if you use Ethereum or Hyperledger Fabric, you should implement your token with the help of smart contracts, and then your token is fully realized by smart contracts. There are other ledger solutions as well. It's like I think the Ripple ledger, which handles tokens natively. So you can issue basically token, you can transfer token, and you can probably revoke token as well as a native activity. You don't need smart contracts for that. But if you have some special program use case, then you can basically hold or you can hold your smart tokens in smart contracts as well. So actually, there's one question regarding the value of the deposit token. So the value of the deposit token should be actually the same as the bank. So if you then you will trust in the token issued by your bank as well. So there's one question, it's a little bit off topic, but anyway, for Hyperledger Fabric development, I would propose there's a Discord channel of Hyperledger, and then it has like a Hyperledger Fabric session as well. So if you have any technical topics regarding Hyperledger Fabric development, I would propose just to jump into the Discord channel of Hyperledger, and then just chat with the people. You can find I mean, many variable help. Anyway, if you have any questions, just feel free to connect me later on. Otherwise, if you have any questions right now, you can feel free to unmute yourself and just ask. Otherwise, I'm just having I don't know, one more question probably, and then we are running out of time. Yeah, it's again one more question regarding the value of the deposit token, but the value of the deposit token is connected very strongly with the value of the deposit at the bank. So if you trust your bank, if you trust that your bank account has a value, which most people actually has, so most people actually trust, apart from some very strong crypto anarchists. Then you can trust basically that the token has value as well. So I would say that was the last question as I see. I would like to thank you very much for the attention, and then that was basically the presentation and some discussion for today. Again, this is a very early stage thing. This is a very early stage topic. We might as well see some achievements in the next 1 or 2 or 3 years, and then we can have like more technical discussions and meetups as well. Okay, thank you very much for the attention and for the contribution, and then have a nice day.
Thanks, Daniel. Thanks, everyone.